We are live, guys. Tonight we are talking about the top 5 dividend ETFs. And what makes these ETFs some of the best out of the bunch is a few different things. Number one, they've delivered really great total returns across the last 5 years. Number two, they have pretty solid dividend stats, which they're dividend ETFs, so they should. But number three, they have very low expense ratios, which is something that is very important. Definitely something you want to look for in an ETF. And we are going to get into all of this stuff in tonight's live stream. But first, before we get to that, guys, welcome to another Dividend Happy Hour. I hope you guys had a fantastic week, and I'm so stoked to see you guys here for another week. Let's kick it off with the cheers, okay? I think that's always the best way to kick it off. And I'm actually drinking a little cocktail tonight, which I'll tell you about in just a minute. I don't quite know what to call it. But anyway, guys, hope you had a fantastic week. Hope you picked up some great stocks, and I hope you got a nice amount of dividend paychecks. So let's drink to that. Here's to dividends. Here's to you guys. That's good. So on that note, actually, let me know in the live chat or in the comments below if you're watching the replay. I want to know a couple things. Number one, what are you drinking tonight? What did you bring to the Dividend Happy Hour? And number two, what did you buy this week? Which stocks did you pick up? So let me know in the live chat. Let me know in the comments below. And I'll tell you a little bit about this cocktail. I see Paolo over there says it's a cup of water. It's not water. I've got my water right here. So this is not quite a margarita. There is some tequila in here, but I did not have any margarita mix, so I had to make do with some like 0-calorie flavored sparkling water from Walmart, which actually it's pretty good. It's strawberry flavor. So it's basically that plus tequila. My only other option was to mix tequila with like chocolate milk, and I don't know. I think this was kind of the lesser of two evils. So we went with the guys, and it's actually pretty delicious. So I'm not going to hate on it too much, but I am missing my margarita. I gotta pick up some more margarita mix here soon. Yeah, let me get through some of the comments tonight, or some of the comments real quick. I want to go through the live chat real quick and see who's all in here. It's the usual suspects as per usual. We've got Coach Tim in the building checking in. We've got Steve C. We've got Luis, Mountain High, Rye, the investor guy who is, as he says, living the dream. I'm so glad to hear that, man. Who else we got? Did I say Paolo? I already mentioned Paolo. But Paolo, what's up, man? Shamir, G-Man, the legendary G-Man. We've got Kevin in here. We've got Will, CG, Chris, Jim. And I think that's pretty much it. Oh, no. Broke Expat John joined the party, as well as Lucas and Bill. Good to see you guys. Angel. We've got Jason, Financial Foundations. Alfonso, what's going on, my friend? Caleb, man, thank you guys all so much for tuning in. We've got Zaldath in the building. Finally made it to a Dividend Happy Hour on time, but I bet you he's empty-handed. You guys, you better not be empty-handed out there. I will be very disappointed because that's a big party foul. You can't come to the Dividend Happy Hour empty-handed. Brett, what's going on, my friend? Miguel, good to see you. I don't know how to pronounce your name, my friend. I'm going to give it a shot. I can't do it. I'm going to call you Fawad? I don't know. I'm sorry, man. I know I butchered your name, but I'm glad to see you in the happy hour nonetheless. As well as Leroy, glad to see you in here, man. Kevin Burgess in the building. Manny's here. Minister Williams, good to see you. Jay, Amadou. We've got Drone and Video from Arizona. We got Retired FM 29. Ethan, Be Still Sounds. Okay, now I'm going to go back up and see what you guys are drinking and what you picked up. Sorry, guys. This is always a fun way to kick it off. I like to see what you guys added to your portfolios this week. So let's scroll all the way back up here. And then for those of you who are just now tuning in, I see there's 105 of us in the stream so far. We're talking about the top 5. Well, maybe they're not the top 5. I mean, it's definitely open to speculation or open to interpretation or opinion, but top 5 dividend ETFs. So we're going to go through those in just a moment, but first we got to figure out what everyone's sipping on tonight. Mountain High, he's got some Lawson's Sip of Sunshine. I'm actually not quite sure what that is, but that sounds pretty good. Shamir's drinking a classic Coca-Cola. My girlfriend's in the other room drinking a Coke Zero herself, so she'd probably cheers with you, Shamir. Broke Expat John, as far as pickups, pick up some SVOL, Jeppy, and JepQ. Bill over in Baton Rouge drinking some Diet Coke. Let's see here. Who else we got? Barrow picked up some Union Pacific and Texas Instruments. Good pickups. Fawad, I'm so sorry, man. I know I'm screwing up your name. But he picked up some AGNC, which I got to admit is not my favorite stock. I think it's kind of a yield trap. We don't have to get into it. Shamir picked up some Hershey's. Oh, no, and he's having a Hershey almond bar. Nice. Angel doesn't have a drink, which is a huge party foul, but he clicked the like, so we'll let it slide. But on that note, guys, if you're enjoying the stream so far and if you like what we are getting into tonight, be sure to hit the thumbs up button on that bad boy, and also hit that subscribe button if you want to join the live chat, and also if you want to see more content from me in the future. That'd be awesome. So we just actually, guys, I think since we last hung out, officially hit 20,000 subscribers on the channel, which is ridiculous. That's so insane. I have my whiteboard up here. You guys can't really see it, but on my whiteboard back in October of this last year, October 2022, I had a goal. I wrote down a goal to hit 20,000 subscribers by October 2023, which I think at that time I maybe had 15,000, 16,000 subscribers. So being able to hit that just a couple months later is such an awesome feeling, and I thank you guys so much for all the support, because it would not have been possible without you. So now my new goal, and it's really just kind of like a, what do they call it? I don't know what they call it, but it's not a number that matters all too much, but it starts with a V, the word I'm looking for. Vanity. It's kind of like a vanity number, but 30,000 by October 2023. That's the goal, so we'll see what happens. Let's see. Paolo picked up some Walgreens Boots Alliance. Mountain High picked up opened a position on OC. I'm not familiar with that company, but good stuff. Chris here. Oh, he's sharing his top 5 ETFs. Jason drinking some bourbon. Good stuff. Bill picked up some Google. Financial Foundations added BlackRock. Jason sipping on an old-fashioned. Oh, bourbon, but made an old-fashioned out of it. Okay. Good stuff. Good stuff. Rye picked up some SCHD, which, spoiler alert, we might be talking about that in just a few minutes, so hold tight. Altria Group, Microsoft, and NEP. Good stuff. Let's see, guys. I see a lot of great pickups in here. I see Luis picked up some 3M, bold move. Not really a bold move. It's, still a dividend king. Kellogg, Kroger, good pickup. Tyson Foods, great pickup. And EMR, good stuff. Miguel finally added Johnson & Johnson on Monday at $161.36 per share. Great pickup. I might add to some Johnson & Johnson next week myself. Let's see here. What else we got here? Leroy picked up a big chunk of Jeppy. Nice, man. Good stuff. Very good. And then Kevin also picked up some Johnson & Johnson and Verizon today. Good pickups, my friend. Good pickups. I need to go into Verizon's recent earnings. I listened to AT&T's so far. Listened to that earnings call. Still need to go through Verizon. But yeah, AT&T seems to be pulling ahead, interestingly enough. Jay this week picked up some SCHD, Comcast, and Cisco. Amadeus like, live chat, go extra 1 hour. Good. Nice, man. Let's see here. Coach Tim picked up some Altria Group. Nice. So right prior to this call, I was listening to their recent quarterly earnings, which I think sounded pretty good. From what it sounded like, they've got an investor day coming up where they'll be hopefully unveiling some new details on their heated tobacco product, whatever that's going to look like. So I'm definitely excited to tune into that. But overall, Altria's earnings are pretty good to me. Let's see. Yeah, guys. Good stuff. Good stuff. Shamir wants to know, well, we'll get into it. I'll save that comment. Shamir, sorry, man. We'll get into that after the main event. But guys, looks like there's some really great pickups. I see a lot of Altria Group. I see. Oh, I did. I get it. Got it right. Okay. Good stuff. Nice. Whew. I see a lot of Altria Group. I see a lot of SCHD. Definitely some Johnson & Johnson. B Still Sounds picked up some Corning. That's a great company. I see a lot of Jeppy. Guys, you guys had some good pickups this week. I see a lot of Kellogg's and Kroger as well. Very nice. So anyway, guys, I think if we keep going through this live chat, we'll be here all night. Let me take another swig here of my whatever we want to call this. Maybe we'll call it no, I don't want to call it that. I was going to call it a retirement on the rocks, but I'm saving that name for a better cocktail. I don't know what we'll call this one. Unnamed cocktail. We'll just take another sip of it real quick. Okay, so my friends, how about we get into tonight's main event, which is going to be to get into the top 5 dividend ETFs. And the first one that's going to be on our list, guys, is SPLG, the SPDR portfolio S&P 500 ETF, which more or less is the S&P 500. Okay, this This ETF has 500 different holdings, which we'll take a look at in just a moment, and it's pretty much just tracking the S&P 500. And this ETF has been around for quite a while, about 18 years now. Their inception was back in November of 2005, and they have, as you can see, a very low expense ratio, 0.03%, which is as low as it gets. And now, taking a look at some of the holdings in this ETF, guys, let me switch screens real quick. Scrolling down, you guys can see, I mean, it's the S&P 500, like we said, or like I said. You know, I don't know if you guys can see that at the bottom of the screen right here. They have 506 different holdings. Their top 10 holdings make up 25% of the entire ETF. And these are going to be stocks like Apple, Microsoft, Amazon, Google or Alphabet, right? Berkshire Hathaway, some more Google, NVIDIA, Tesla, ExxonMobil, and United Health Group, UNH. So some solid companies there to kick things off. Apple is a big chunk of this ETF, making over 6%. So that's pretty wild, guys. That is pretty wild. And let's see how it stacks up. I mean, it says it's supposed to track the S&P 500 performance and holding. So let's see just how it compares in terms of total return across the last 5 years. Now, if we go over here, I mean, just in the last year, it's pretty identical, right? There's a 0.1% difference. And we're going to see the same is true across a longer period of time, across the last 5 years, where the total return is pretty much identical. And the same is going to be true across the last 10 years, guys. And this makes sense, right? Because this ETF, it just tracks the S&P 500. It's basically just it's basically just the S&P, okay? So nothing too crazy, but there's nothing wrong with investing in the S&P. If you just invest in the S&P, you should fare pretty well over a long period of time. Now, going back over here, let's take a look at the dividend stats real quick, okay? They have a pretty low, dividend yield, 1.5%, but the growth rate's not too bad, 6.8%, and they've been growing this dividend for the last 2 years. And if we take a look at the dividend history, I think we'll see if we zoom out over a longer period of time, they have slowly but surely grown this dividend. I mean, the slope's not anything too aggressive, but you can tell across the last, since 2008 or so, which is the farthest that it'll take us back, this dividend has been growing over that period of time. So that is good to see. And I would gander that this is a pretty reliable ETF. I mean, like we mentioned, it covers the S&P 500. You really can't go wrong there. So this is 1 out of 5 of the top 5 dividend ETFs that we're going to be going through. And then going back over here, the next one, guys, is going to be SPYD, which is kind of similar. Okay, this is the SPDR portfolio S&P 500 high dividend ETF. And it's a little bit different, okay? Still the S&P 500, but this ETF tracks the top 80 highest yielding dividend stocks in the S&P. And this one's about 10 years younger than its older brother, okay? This one has been around since October of 2015, and it's got a little bit higher of an expense ratio, 0.07%, which really is still not too bad. But if we go back over to Seeking Alpha, guys, let's go over to SPYD. We're going to take a look at the top 10 holdings. Now, remember, it includes the top 80 highest yielding dividend stocks in the S&P, and in total there are 83 different stocks in SPYD, okay? And some of the top 10 holdings are Paramount, we've got Seagate, which actually is a company I'm not really familiar with, International Paper Company, Key Corp, Packaging Corp of America, Digital Realty Trust, DLR, Ford, Best Buy, Franklin Resources, ticker symbol BEN, and then Iron Mountain, which I think is another REIT, right? I'm pretty sure Iron Mountain is another real estate investment trust, but the top 10 holdings in this ETF make up 13%, so it's still pretty diverse. It doesn't look like any one particular holding is going to be too overbearing in this ETF. They all have pretty similar weightings, if you will. Now let's see how this stacks up against the S&P. I mean, these are just the top 80 highest yielding stocks in the index, but let's see how it stacks up against the index as a whole. So we're going to zoom out across the last 5 years, take a look at the total return, and it will tell us that it is underperforming the S&P across the last 5 years on a total return basis by about 20%. So that's not super ideal, but I would be willing to bet that the dividend stats are going to be higher than what you'd get investing in the S&P. So from a cash flow perspective, it's going to be more advantageous to buy this ETF with the 80, top 80 holdings, top 80 highest yielding holdings in the S&P. And we can see this to be true. I mean, just taking a look at the last ETF, which was, what was the yield on that? About 1.5%, which tracks the entire index. Okay, this yield is over 3 times higher, about 3 times higher. So you're getting 3 times the cash flow return with SPYD than you would the S&P 500. And the 5-year growth rate's pretty similar, about 6.8% with 1 year of dividend growth. But let's look at the dividend history real quick, guys. We might see a similar trend where well, actually, I suppose not. Actually. I was going to say maybe we'll see more dividend growth. But really, this over, since its inception back in 2015, it looks pretty flat. So there doesn't appear to be too much dividend growth coming from this ETF, but nonetheless, you're still benefiting from a pretty decent yield today. 4.6% is nothing to turn your nose up at. So I think this is a pretty solid looking ETF, especially when you consider that, just like the last one, they have a pretty low expense ratio. Now, guys, this brings us to the third ETF that I want to talk about. This is DJD, the Invesco Dow Jones Industrial Average Dividend ETF. And this guy is designed to provide exposure to dividend-paying stocks in the Dow Jones Industrial Average. And this one came onto the market about the same time as SPYD back in 2015 at the end of the year, and it has the same exact expense ratio, 0.07%. So nice and low there, okay? Now let's go back to Seeking Alpha, take a deeper look at DJD, and before we get into the dividend stats, well, excuse me, guys. Excuse me, hang on tight. Hang on tight, it's a bumpy ride. So going over to the holdings, this ETF really, it's not diverse at all. 30 different stocks in this ETF, which is just a few holdings more than my own portfolio has, and it's definitely a lot less than what we'd find in the S&P, definitely a lot less than what we'd find in SPYD, right? Certainly a lot less than what we'd find in VTI, which has over 4,000 different holdings. So this ETF doesn't appear to be as well diversified, and the top 10 holdings make up about 60% of the total weighting of the ETF, which I guess is not surprising considering there's not that many holdings. But some of these top 10 include Dow Inc., Verizon, Walgreens Boots Alliance. These are all very recognizable names. IBM, Big Blue, shout out EBS Invest, aka North in the Discord group, aka the president of the Big Blue fan club. 3M's also in this ETF. Intel just breaks my heart. JP Morgan's in here, Merck, Chevron, and Cisco. So some pretty decent companies, guys, in this top 10. And let's see how it stacks up against the S&P 500 on a total return basis. So going over here. Okay, so in the last year, well, look at the last year while we're here. In the last year, it has seen less of a drawdown than the S&P, which is great. But if we zoom out across a longer period of time, we'll see that it still, unfortunately, underperforms the index there, okay, by about 13%, which is not as a lesser, that's a lesser spread than what we saw with SPYD, who was down, I guess, what was it, about 20% compared to the S&P. So this one is performing a little bit better than the last one. And taking a look at the dividend stats, these are going to be looking pretty good. The forward yield or the dividend yield, is not as high as SPYD. This is 3.08%, which is still pretty decent. But the 5-year growth rate's up there, okay? Close to 10%. It is just a hair below 10%, which is very nice. And they've been growing this for the last year. But let's take a look at the dividend history and see what's happened across a longer period of time. I mean, since 2016, since the ETF's inception, that's kind of a tongue twister, there's a little bit of an increase in the slope there. It's nothing too dramatic, but it's there. It exists. And you're getting exposure to a lot of the dividend-paying stocks in the Dow Jones Index. So overall, I think this ETF still looks pretty good. It's not market-beating returns, but still pretty decent returns when you compare it to the index as a whole, okay? Now, let's go over to the second top ETF. And by the way, guys, these are in no particular order. It's except for maybe the last one, which I probably already spoiled it. You guys probably already know what that one's going to be. But these are in no particular order otherwise. SPYD is not necessarily better in my eyes than whatever the first one was, SPJG. I don't remember what the ticker symbol was. Let me look. SPLG, excuse me. And SPYD is not necessarily better than DJD, and this next one is not, you guys get what I'm saying. But anyway, going over to the fourth top ETF, guys, we're talking about DGRO, which is a very popular dividend ETF. This is the iShares Core Dividend Growth ETF, which provides exposure to companies in the United States that have a history of growing their dividends. And I tried to look deeper to see if they had some sort of criteria for what that means. Like if there was a minimum, a minimum years of growth that they were looking for this ETF, but I couldn't really find anything on that. And maybe I didn't look hard enough, but it seemed pretty vague to me. It just said, what I typed out here, which is a history of growing their dividends. So, but hey, that's still pretty good. And they have an inception date of June 2014. So they've been around for almost 9 years now. And the expense ratio is the highest that we've seen so far today, but it's still really not that high. It's 0.08. I don't consider that to be a high expense ratio. But anyway, going over here, we're going to go take a look at DGRO. DGRO. We're going to look at their top 10 holdings, and these should be more dividend growth stocks. We've got, yeah, definitely. We've got ExxonMobil, who's, if I remember correctly, their 5-year growth rate's actually not that high. It's like low single digits. JP Morgan has a pretty high 5-year growth rate. Apple has a high 5-year growth rate. Microsoft does. Johnson & Johnson's is decent, like mid to high single digits. Chevron, I think kind of the same thing, but AbbVie has a very high double-digit 5-year growth rate. Procter & Gamble's is mid-single digits. Home Depot's exceptionally high, definitely double digits. Pfizer, I think, is right about 5.5%. So there's definitely some high dividend growth stocks in here, and also some, moderate to average dividend growth stocks. But nonetheless, there are a lot of different holdings in this ETF. There's 452 in total. So just by buying this one ETF, you're getting exposure to just probably more companies than you really need. It's pretty insane. And in fact, if you didn't want to invest in any individual stocks at all, I think you could probably get by just investing in this one ETF, just DGRO, like 452 different holdings. Just buy that one, set it and forget it, and you'd be good to go if you wanted to go that route. But I know a lot of us like investing in individual stocks. That's fun for us, but I understand it's also not for everybody. And also, there's kind of a sidebar here that I should have addressed earlier. So all of these ETFs, and I'm sorry to just now be mentioning this, but it just came to mind. All of these ETFs are under $100 per share. And I know, I get it, guys. A lot of the brokerages here in the United States, we've got the ability to buy fractional shares, but that's not the case for every single individual. So there's still some people out there who, it's helpful to talk about these ETFs that are at a certain price point, because they don't have access to buying fractional shares. And actually, a lot of us, or all of us, Charles Schwab investors who use that as our brokerage, for all of these ETFs, we can't buy fractional shares. We still have to buy whole shares of ETFs on Charles Schwab. They have their stock slices, which is their, you can buy fractional shares using stock slices, but I believe it's just individual companies in the S&P 500. You can't even buy a fractional share of SCHD. Hopefully that will change in the future, but the point here is not everyone is lucky enough to have access to fractional shares. So sometimes it is important to talk about these stocks that maybe are at a certain price point for the investor who wants to still contribute every week and buy stocks every week, but maybe doesn't have, a ton of money to do so. So I just wanted to clarify that, because I'm sure that there's going to be some comments about it in the live chat or in the comments below. But anyway, getting back to it, guys, DGRO. We just went through the top 10 holdings. Now let's go take a look and see how it's stacked up against the S&P 500, okay? So across the last 5 years, taking a look at the total return, it's pretty identical, actually. Right there. It's right in line with the S&P 500, like less than 1% difference. So that's pretty unbelievable. And also, you'll be getting more cash flow, more dividend growth from buying this ETF. So I think that's pretty solid. And then taking a look at the dividend stats, guys. The yield's pretty decent, 2.26%. That's average for, a dividend stock, right? But look at that 5-year growth rate. This is the first time we've seen a double-digit 5-year growth rate out of all these ETFs, and that's very nice. Furthermore, they've been growing this dividend for 8 consecutive years, which is the longest dividend growth history we've seen out of all of these ETFs, and that's fantastic. And if we take a look and see how this slope has increased, they don't have too much of a history. It goes back to 2015 or so. Well, actually, let me take that back. 9 years of dividend growth history. That's going to be since their inception. So nice, and it looks like they've definitely boosted this dividend here in 2022. So we'll see what happens here in 2023. But anyway, DGRO is looking like a really great ETF. I know it's a pretty popular ETF amongst a lot of us in the dividend investing community, but I will say it is not as popular as the top dividend ETF, which I also refer to as the holy grail of dividend ETFs. You guys already know we're talking about SCHD, the Schwab US Dividend Equity ETF, which seeks to track the total return of a specific index within the Dow Jones. The Dow Jones US Dividend 100, the Dow Jones US Dividend 100 Index. Now, the particulars here is that all stocks in this Dow Jones US Dividend 100 Index must have at least 10 years of consecutive dividend payments, not necessarily dividend growth, but they must have been paying a dividend for at least the last 10 years. That is a must. If they don't accomplish that, then they're out. They're nixed from that ETF, okay? And SCHD has been around for over a decade now. Coming up on 12 years this year. They came onto the market back in 2011, and they have a 0.06% expense ratio. Love to see it. Now, I'm very excited to talk about this ETF. I mean, this is hands down, like without a doubt, the most popular dividend ETF out there, guys. And I know a lot of you guys, I mean, we saw it in the live chat and we'll see it in the comments below. A lot of you guys bought SCHD this week. A lot of you buy it every single week, including myself and the Roth IRA. But let's go and take a deeper look at SCHD and see what some of these holdings are. Now, first things first, there are 104 different holdings in SCHD. So I think that's a pretty comfortable amount of diversification, and the top 10 holdings make up 40% of the ETF. Now, look at all these companies, guys. Broadcom, and by the way, these are also some companies that we've seen in other ETFs today, but we've got Broadcom, we've got Verizon, we've got Texas Instruments, we've got Home Depot, Cisco, BlackRock, Merck, Coca-Cola, Lockheed Martin, and Pepsi. I don't think there's a name on this list that you guys probably don't recognize. Very popular companies, very popular, dividend companies, right? So SCHD is a beast, and if we go take a look at the charting, see how it's stacked up against the S&P 500, you guys, it's actually beat the S&P. The only ETF on this list that's beat the S&P in the last 5 years, okay? And there's like a 13% spread there. Near 80% gain for the S&P, or for SCHD, versus about 68% for the S&P. So, guys, this is one of the reasons why we call it the holy grail of dividend ETFs, right? Now, taking a look at the dividend stats, like this is the main reason, okay? So not only do they have market-beating returns, but look at these dividend stats. It's pretty much everything you'd want. A decent yield, 3.3%, and an astronomically high 5-year growth rate, 13.74%, which is a few points higher than what we saw with DGRO, which is a dividend growth ETF. Okay, and they've been growing their dividend for just 1 year longer than DGRO, 10 straight years. And if we go over to the dividend history page right here, zooming out, look at this slope. That's like noticeably increasing. I think that's the first time that we can say the slope on the dividend growth is noticeably increasing over time. Others, yeah, it's been pretty slight. Okay, but this is very clear. There is no denying that there's been an exceptional amount of dividend growth for SCHD, guys. And, you know, like I said, I don't know. I'll say it again. It's the holy grail of dividend ETFs. None of these were in order, I think, at least in my opinion, except for SCHD. And I'll stop tooting its horn because I don't want SCHD to get a big head. But now, guys, those were the top 5 dividend ETFs that I wanted to share with you today. And now I want to hear from you. Okay, I want to hear from you guys. I have a question. Let me know in the live chat. Let me know in the comments below. What are your favorite dividend ETFs? I'm sure maybe one or a couple of them are on this list. Maybe you've got some others that I did not talk about tonight. I saw a few others like VYMI mentioned in the live chat. Let me know, what are your favorite dividend ETFs? I'm curious to hear. And now I want to go through. I'm like 66 comments behind, so I want to go through and see all what I missed in the comments. And I'll put some of your guys' responses up here on the screen momentarily. But let's see. Let's see what I missed here in the comments. Whew! That was good. And also, 165 of us in the currently in the live stream. I just want to thank you guys so much for tuning in once again tonight. We're about halfway through tonight's live stream, and now we'll get into the Q&A once we go through some of the responses here. So looks like, okay, here we go. It looks like Bill here says his favorite is SCHD. Okay, Cub Freak, SPHD. Rye really likes SCHD and JEPI. I almost talked about JEPI tonight, but I pulled it out last minute in place of SPYD. You know, I thought JEPI most certainly has the highest, by far, the highest yield, and actually has a pretty solid total return across the last 5 years. But I wanted to keep it, you know, I decided, and this was actually inspired by a conversation I had with ex-Dividend Dad, who's in the Discord group. He's probably watching right now. You know, I wanted to keep the specific covered call ETFs off of the list. So, which it's tough. It's tough to mention dividend ETFs and not mention some of these like QYLD, XYLD, and JEPI these days, especially because ones like JEPI are so popular. But yeah, I don't know. I feel like it was a pretty good list for sure. But anyway, Kevin really likes SCHD and JEPI, which really is honestly like a solid combo. If you wanted to just have like a 2 ETF portfolio, I think that's pretty good. You're getting a lot of good stuff from SCHD, and you're also getting some solid monthly income from JEPI. But there's a huge asterisk attached to JEPI that, you know, I think everyone needs to be aware of. It's just, before you decide to buy into that, just like spend an hour, spend a couple hours of research just looking into it, making sure you understand the covered call strategy, what that is, what the equity linked notes are, which is what they use to generate the options premiums that where most of the dividend income comes from this ETF. Just spend a little bit more time trying to familiarize yourself with JET, because it's a little bit more in depth. It's a little bit more complicated than something like an SCHD. So, but anyway. Zal says his favorite ETFs are SCHD, VIG, and DGRO in that order. Dividend Robs like in VPU, which actually is one that I'm not really familiar with. Luis says these are his: Markets, VTI, and VEA. Dividends, SCHD plus VYM and VYMI. Yeah, VYM is another good one, but over $100 per share. That's why I didn't talk about it. JEPI, and then a little VNQ. Very nice. Very nice. Miguel, SCHD, DGRO, and VTI. Paulo, QILD, and SCHD. Like I'm telling you guys, a lot of SCHD. SCHD and VYM. Jason, SCHD. And then Lucas wants me to check out HMAX. We can give it a look here in just a moment. Remind me to come back to this one, Lucas. I'll take a look at it because I've not heard of it. Leroy, SCHD. He is SCHD Stan on Twitter. Stan the man. David also likes SCHD. Chris, aka Kama, SCHD, VIG, and JEPI, but he only has SCHD. And Jim, surprisingly, I have 76 holdings. Not one of them is an ETF. Good stuff. Good stuff. Yeah, Zal. That was kind of my thought process with the list. Yeah. Anyway, any reason Verizon is top holding an SCHD and not AT&T? I'm not sure, to be honest. Anyway, ex-Dividend Dad, SCHD is his. Gabriel, SCHD, and VYM. Guys, a lot of good stuff. I mean, SCHD. Everyone just loves SCHD. But ex-Dividend Dad says SPDV is the most underrated ETF ever. Interesting. Very interesting. Cub Freaks, this is actually a good question. How come no one ever talks about SPHD? Is it boring? It's not boring. And actually, when I was doing my research for this video, I thought about putting SPHD on the list, but couple things about SPHD. I mean, they pay a monthly dividend, which is nice. Other than that, in my opinion, there's nothing too spectacular about the dividend stats. And really, a monthly dividend really does not make a difference. I mean, $1, and I've gotten into it in the comments, and I think in these videos about this same subject, but $1 per month in dividends really is the same as $3 per quarter in dividends. Really, across a long period of time, it makes a negligible difference in your portfolio's value, its income. But some people like monthly payments, which is understandable. I don't blame them there. Just having that, come in every month is nice. SPHD, compared to all of the other ETFs we've talked about tonight, has a considerably higher expense ratio. And the return, it's like, the total return wasn't anything spectacular, which is why I left it off of the list. So that's my take there. Anyway, let's. I'm gonna go back up, guys. I think I want to get into the Q&A now. I know I missed some comments in the live chat. I'm just gonna take a quick scroll through the live chat and see what I missed here. Oh, Rye says, Metallica has a song called The Unnamed Feeling. We can call your drink the Unnamed Cocktail. I dubbed the Unforgiven. Okay, so for those of you who missed it earlier in the video, I'm drinking this. I really don't know what to call it. And this is the first time I've had a cocktail on a live stream in a while, like probably a month and a half. I used to come, prepped with a margarita every single week, rain or shine. But anyway, this has tequila in it, but it's tequila, and then it's like some flavored sparkling, 0-calorie sparkling water from Walmart. I didn't have any margarita mix. I don't even think I have limes. And my only other option was like chocolate milk. So it's like I had to make do, essentially. It's still good though. Still very good. And Norman, I think Norman, really, whatever we're talking about, I think he said it best. Took the words right out of my mouth. But really what these are, they're different ETFs. We've got VU, VTI, QQQ, and he lost me after that. Okay. Yeah, Dan says the next list will be the most degenerate dividend ETFs for sure. Nice. Okay, let's keep going. I'm just going back through the comments real quick, guys. The comments in the that I might have missed when I was doing my spiel. Just taking a very, very quick scroll. Very quick scroll. See if there's any questions or anything like this. Not really. I'm actually pretty much caught up in the comments now. Okay. So guys, now let's just get into some Q&A. We've got about 25 minutes left in the stream. I'm going to finish this unnamed cocktail, and then I got to jet and go get some Chipotle, which has started to become kind of like a Friday night ritual, which fine by me. Fine by me. Also, on that note, guys, let me know if you guys frequent Chipotle. Let me know in the live chat. Let me know in the comments below. What's your go-to order from Chipotle? I always get a burrito. Sometimes double wrapped. Tonight probably not. Maybe. Anyway, burrito, white rice, black beans, chicken. If I'm feeling froggy, it's either double cheese or it's no cheese. But tonight I'm going double cheese, and that's pretty much it. Oh, veggies as well. I'll get the fajita veggies. That's it. Bring it home. I have like some ghost pepper sauce in my fridge, or some Valentina, which is like, oh my God, some of the best tasting hot sauce you'll ever have, Valentina. Just, sprinkle some of that with each bite. Can't beat it. Can't beat it. Anyway, let's keep going. Cliff says VPU is Vanguard Utilities. Okay, and you know what? I think ex-Dividend Dad might have told me about this one in our conversation. I also wanted to not include sector-specific ETFs on this list. Like SCHH was one that we talked about, which is the Schwab Real Estate Investment Trust ETF. Great ETF. I know Vanguard has a comparable one that's also awesome. I just wanted to leave the sector-specific ones off of the list for tonight for this particular instance, because then if you include a REIT one, you got to include the utilities one, you got to include the tech one, so I just figured it'd be better off without it. Let's keep going here. Yeah, thanks, Zal. So I agree with your reasoning for not including JEPI on the list, as it's not truly a dividend ETF. Most of the yield comes from options, not dividend. Yeah, exactly. I like JEPI. I've got JEPI, but it just, for this particular list, it seemed very much like the black sheep, and it definitely didn't seem to go with the other ETF. So I wanted to replace it with one that made more sense, just based on the context. Yeah. Okay, I see you guys talking about SPHD in there. Uncultured Currency, my man Mark. Proud to see your growth, man. It's crazy seeing where you started and where you are now. Thank you for getting me into dividend investing as well. Man, dude, thank you for all your support on the channel. I mean, yeah, dude, likewise. I mean, it's been an interesting couple years on YouTube. Like, you go back and watch, sometimes just for, I don't know if it's fun. It's probably more for like, I don't know, self-inflicted pain. But I'll go back and watch like my earlier videos, and it's so cringy, guys. Like, it is so cringy. I mean, I'm definitely not perfect in my videos. We definitely come a long way, and it feels good. But oh my gosh, man, it's just a journey of constant evolution. It's much like dividend investing. The more you do it, the more time in the market that you have, the better it gets. And the same is true with making videos, or really anything, any sort of hobby or anything you do. The more you do it over time, the better you get. But Mark, thank you so much for the compliment, man. And dude, we got to do another video together sometime soon. It was really fun last time we got together, and I'd love to do that again. Let's see. Yeah, Leroy, like, aka SCHD Stan, how can you beat the current yield plus dividend growth plus historic performance of SCHD? Dude, it's tough. Like, you can't, I don't know. You can't. That's why I call it the Holy Grail, man. You just can't beat it. You really can't. And then Zal says, man, been out here living it up in Vegas, so he had to go easy and hydrate with us. Yeah. Yes, sir. It's awesome. I still love living out here in Vegas. It's incredible. I've been here October, November, December, January. Just over 4 months now. And I cannot think of one bad thing about living here. It's exceeded every single one of my expectations. And I don't go down to the Strip too often, maybe once every couple weeks, few weeks, maybe once a month. I'm going to go down there this weekend. But every time I drive down there and just start driving down into the Strip, seeing all the lights and the hotels, it's like I'll look up and look around, and it's like I still cannot believe I live here. It's such a cool feeling. Let's see. Kingdom of Finance, what's up? How you doing, my friend? Okay, Miguel wants to know, can you check MAA? I can. Let's check it out. I'm not familiar with MAA. I don't think I am, at least, but let's give it a look. So, oh yeah, I actually do think I've looked at this company once. MAA is Mid-America Apartment Communities, which, I mean, just based on the name, it should be a real estate investment trust, right? And we'll take a deeper look at the financials in just a second, but look at this revenue chart. That's some nice steady growth right there. We'll take a look at the financials, the dividend stats, and the valuation real quick. Now for the financials, we'll take a quick look at the income statement. We saw the revenues really going up. That's fantastic. Very solid, steady growth across the last 10 years. And apartment buildings are great. I mean, obviously I don't exactly know where these properties are located, but I think that's a pretty safe asset class to get into, apartment communities or apartment buildings. So furthermore, this bottom line, the AFFO, which is what real estate investment trusts use to pay the dividend, and actually let me get rid of this comment. What real estate investment trusts use to pay the dividend, hopefully you guys can see all of that chart. I know it's kind of cut off, but this is, let me do it this way actually. Can you guys see that? This is going up very steadily across the last 10 years as well, which is a great sign for us dividend investors because like I've said like twice, I think now, this is what they use to pay the dividend. And now the FFO payout ratio, which is basically like the real estate investment trust equivalent of a payout ratio, is pretty nice too. About 50% consistently across the last 10 years. So that's fantastic. Let's take a look at their balance sheet, maybe see their assets to liabilities, what's going on there. So total assets, this is very like surface level overview, guys. $11 billion, $11.2 billion in assets with $5 billion in liabilities. That's fantastic. So, excuse me, a lot more assets than they have liabilities for sure. So I'd say the balance sheet looks pretty good just based on that. Doesn't really look like they've made, I mean, maybe they have, maybe some acquisitions or, increasing their assets a little by little across the last 10 years. It looks like nothing too crazy. But over time, it does look like, I mean, there's a big jump here in 2016, but it does look like this has trickled down, which is coming from net property. Oh, so just the depreciation. So okay, this is happening. Their assets really are going up, but because of depreciation, on a net basis, it's going down. So that's kind of interesting. And I'm just kind of thinking out loud as I'm going through it, guys. So sorry for the commentary there. But now taking a look at the dividend stats, this is not too shabby, okay? 3.2% dividend yield with 7% growth rate. That's nice. 12 years of dividend growth, but how long have they been paying this dividend? Wow, for twice the amount of time. They've been paying it for 24 straight years. That's some nice consistency. And it does look like the dividend growth has come more aggressively in recent times, or at least in the last, few months. Actually, it looks like they've raised it a couple times with a pretty nice raise here last month. So over a 10% raise last month. So that's great. Let's take a look at the valuation. I mean, I saw the P to FFO was just under 20, which isn't terrible, but this is about 25% higher than the 5-year average, or than the sector median. So that is something to keep in mind, but the company does seem to be growing pretty aggressively and pretty consistently. So maybe the higher P to FFO is worth it, but I will say this P to FFO is considerably higher than, you know, like another one of my favorite real estate investment trusts, KRC, which I actually listened to their earnings call today as well. And we'll see similar financials too. I mean, just look at that P to FFO. It's about half of what MAA's is. And we look at the financials, it's pretty similar. Like very aggressive growth on the top line on the revenue side. And then also actually, I would say even more consistent and aggressive growth on the bottom line, the AFFO. So just on the financials, and I mean, taking a look at the balance sheet too, just on the financials, I would say KRC still looks more favorable to me. Where's their assets? So total assets about 11 billion, 10.7 with $5 billion in liabilities. So that's pretty good. But yeah, anyway, thank you for showing me that one. I don't think I would have otherwise looked at MAA, but it was kind of cool to scroll through that. Yeah. Let's see, where was I? Okay, there we go. Jason had Chipotle last night from my earlier comment. Erod, are you saying Chipotle is too bland, or were you talking about something else? Okay, Paolo, this is actually a really good question. How do you evaluate ETFs except for the expense ratio? So a few different ways. You'll want to look at, obviously, the share price performance. What is that doing? You'll want to look at the dividend stats for sure. You'll want to look at the holdings, all of the holdings. And also what's the goal of the ETF? Because all of them have different goals and different things that they track. So does that align with what you're looking for in an investment? And that's also something to keep in mind too when considering potential ETFs. Like what do you want out of it? Are you looking for something like VTI or VU, which is going to offer broad market exposure? Or are you looking for something maybe a bit more specific like SCHD or something like DGRO, which will offer specifically like dividend income and dividend growth? I mean, SCHD offers great returns too, and DGROs was not bad either. So it just depends. It's like those few things. And I'm sure there's some other metrics to look at as well, but those are some of the things that I take into consideration for sure. That was a good question. And also too, like other, if you guys have anything to add to that, please let me know in the live chat and also in the comments below if you're watching the replay. Okay, Lucas, look up HMAX. Okay, I'll check it out, man. Let's go take a look at HMAX real quick. Oops. Go over to the screen. HMAX. Let's see here. Okay, this is Hamilton Canadian Financials Yield Maximizer ETF Class E. That is quite the name. Okay, so what does this ETF even do? So it's an ETF launched and managed by Hamilton ETFs. The fund, okay, this is important, invests in public equity markets of Canada. It invests directly and through derivatives of stocks of companies operating across financial sectors. Okay. It uses options to create its portfolio, so maybe a covered call type strategy as well, maybe similar to something like a JEPI. It currently does not pay a dividend according to this. Let's double check that here. Yeah, so doesn't pay a dividend. The holdings, top 10 holdings are not available. Let's see if it has an expense ratio. There's no expense ratio listed. Liquidity. There's really not much information on this ETF, unfortunately. So, Lucas, I'm sorry, man, but yeah, it's really not showing me much here. Okay, this is also a really good question. If your dividend stock ever hits a 52-week high, do you sell your entire stock and then rebuy when it hits just slightly below? Not necessarily. And there's different schools of thought on this as to when you should consider selling out of a position if you're taking a profit on it. And this is something that I'm still trying to think through myself because I'm still not quite sure what the best, and it's on a case-by-case basis as well. But this is something I still don't have a great protocol for. I know I would actually be curious to hear if Kevin Burgess or Zal or some of you guys in the live chat have any opinions on this. I'd love to hear your feedback. You guys might have a better answer than I will, but I wouldn't just make it a point to sell a stock if it hits a 52-week high. What makes sense to me is if you're up on a position, it makes sense to me to sell if you think that position, or if you've crunched the numbers and you've determined that position is trading above its intrinsic value. So what it's really worth intrinsically on a per share basis. Now, the reasoning behind that, if it's trading above its intrinsic value, or what do you perceive or calculate its intrinsic value to be, then, if all is fair in the world, then at some point that stock, and if the market is at least somewhat efficient, then that stock should return to where its intrinsic value is. That's kind of, when thinking through it, that's the conclusion that I come to. Like I said, I'd love to know your guys' thoughts on this in the live chat and in the comments below. Does that make sense? Hopefully that makes sense, Cubs Freak. That was a really good question. So yeah, let me know if that clears things up for you. So, okay, interesting. Oh, real quick, I'll come back to this. So, Jay, in the Chipotle line right now, dude, that's too funny. Okay, Patel Ron wants to know, Scotts Miracle-Gro has done well. Is it a short squeeze? It has done well. I actually put out a short about this stock, a short video on YouTube about this stock a couple days ago called 3 Dividend Stocks You Should Have Bought 1 month ago. And this stock has skyrocketed in the last 30 days. It's up nearly 70%. 70%, and I don't know why that is. I really don't know why that is. I've not done any research into Scotts Miracle-Gro, but let's take a look at some of these news. I don't know, maybe they just beat on earnings is probably part of it, because it looks like this jump. No, the jump came before earnings. So what happened on like December, gosh, what happened on like January 30th? I don't know. I really don't know what happened to Scotts Miracle-Gro to make it jump that much, but it does look like they beat earnings. But still, like taking a look at these numbers, like their earnings per share, they were still negative, and their revenue did beat, but still they're negative in the bottom line, which is not great. And they're still declining. Like sales declined, gross margin declined, a little bit of growth in operating income, a little bit of growth in EBITDA. Free cash flow of $1 billion over the next couple of years. What do the comments say? Yeah, so here's an interesting comment, okay? You know something is wrong when a stock like this is significantly off its lows and is rallying by only reporting a Q1 gap loss of 117. I think Jay Powell has a lot of work ahead of him to quell the animal spirits. This stock should be at $40, not $75. And, disregard like the actual price target. But the moral of the story is this comment basically is saying doesn't make the most sense to see a stock jump that much when, although they beat earnings analyst estimates, the numbers themselves in their own right are still really not that great, especially the earnings. They're just still negative. So I don't know. I really don't know what's up with Scotts Miracle-Gro. I was really interested in this company a while back, and they were just above $100 per share at that point. And man, I've seen it go from there to where it was maybe $50-$40 a share, somewhere in that range, right? But I don't know. I don't know if it's a short squeeze. I would just wait and see with that stock. Let's see. Oh, interesting. My friend wants to know, hey, Ryan, do you have any interest in closed-end funds? I do. I do have some interest in them. And coincidentally, actually, Zal and I were briefly talking about this the other day in the Discord. Very briefly. One second. So, I'll show you guys this book. So there's this book written by Stephen Bavaria, who actually is a contributor to Seeking Alpha. There's this book called The Income Factory. And the gist of it, it's basically teaches you talks about building a portfolio, a dividend portfolio that is an income factory. And it pretty much strictly talks about closed-end funds throughout. And I first read this book. I was telling Zal, I read this book when I first got into dividend investing a couple years ago now. This was like probably actually soon after I first started making videos. And a lot of it went way over my head. Like I truthfully did not understand a lick of this book. And actually just flipping open to a page, I see I highlighted some stuff, which is helpful. I definitely plan to go back and read this book at some point and hopefully learn a lot more about closed-end funds. And I think I will absorb a lot more of this than I did when I first read it, just because I think my skill set's a bit more developed than it was a few years ago or a couple years ago. So I'm excited to dive back into this book at some point and learn more about closed-end funds because it seems to me I don't know a lot about them, but they seem a bit more complex. They seem somewhat complex, but man, the yields on some of these closed-end funds are crazy. They are crazy high. Like it's not uncommon to see like a 15 to 20% yield on a closed-end fund. Yeah, and I think it'd be interesting as kind of an experiment too to open up another portfolio that is just like based on what I learned in this book. So stay tuned for that, guys. That might be something. Hi. Peanuts joined us. He decided to join us. So that might be something that you guys see from me in the future, but I don't think I'll be getting to this book anytime too soon because I'll just set this here for now. I am currently in the middle of this book, which I highly recommend, guys. I just started reading this a few days ago, and I'm already like definitely making some headway on it. But this is The First American, The Life and Times of Benjamin Franklin by H.W. Brands. Really great book so far. It's just a biography on Ben Franklin. And I honestly think, I think that if Ben Franklin were alive today, I think he'd be a dividend investor. There's one part in this book, I just read it today. So Ben Franklin used to have a printing business in Philadelphia. And over time, this business grew. He became a very successful printer by trade. And this business grew to the point where he, started hiring help and expanding. And in the book, it talked about how he saw this business and the money that he generated from it, not as a means to, not as money being the means that he was working towards, but having the money as a means to being able to do other things. And I think that really resonated with me because I think that a lot of us dividend investors think the exact same way. At least personally, I think of my portfolio and being able to retire early and live off dividends off of my passive income as a means to spend more time doing things that are really meaningful to me, that I really enjoy. And Ben Franklin was the same way. Like as soon as his business got to a point where he was able to allocate time elsewhere, to dedicate time to other things he was very interested in, he started doing that, learning more, doing more inventing. He actually invented what's probably like a precursor to the modern fireplace, which back on the East Coast, especially during the wintertime, was a very important invention. And it did really well. It did really well for him. But anyway, very interesting book. I feel like I could talk about it all night, but I highly recommend you guys check it out. It's very interesting to read about Ben Franklin. But the next book that I'm going to read, and I probably should start chipping away at it, is The Little Book of Valuation by Aswath Damodaran, who is known as the Dean of Valuation. I think he's been teaching at New York University since like the 80s. And in my newsletter, I shared a podcast. Yeah, in my newsletter this last week that went out yesterday, I shared a podcast that I listened to interviewing him. And in this next week, I'll share another very great podcast interview with Professor Damodaran. And he's got all of his lectures here on YouTube. You just type in his name. Yeah, and you can see him. I have a few playlists saved that I need to go through, but really, really great stuff. There's so much good information out there. Sorry for the tangent, guys. Let's look at maybe one or two more comments, and we'll call it a night. I'm so stoked for some Chipotle. Let's see. Yeah, Amadou says Ryan plus Darth, great video combo. So I have a group chat with Darth, Russ at Dapper Dividends, and Ari Gutman, and we chat. We've been texting a lot lately. And last month we did a video together, And we've been talking about doing another video together, like maybe like a live stream or something here on this channel sometime this month. So stay tuned for that. Hopefully we'll get something together. But yeah, I love chatting with those guys. We have a really good community. There's just a lot of really good people making videos. And just, I don't know, a lot of good people in general. Oh, this is such a good question. So Ryan, since you live on the Strip or in Vegas, basically, do you own any Vici? No, man, I don't. Like, I feel bad, and I actually really like the company. I should consider adding it to my portfolio. I really should. It's been like kind of in the back of my mind for a long time. Let's see here. So Zal says, don't forget to look up HMAX. I did look up HMAX, Zal, and there really wasn't any info on it on Seeking Alpha. Like, it didn't show any holdings, any dividend stats. There really wasn't even any expense ratio information either. It was just share price performance. That was it. Okay. Oh, there he is. Oh, I'm 15 minutes behind in this gosh darn chat. Sorry, guys. I did not realize I was that far behind. I did not realize it. I am so sorry. Okay, I'm caught up now. I scrolled all the way down. Cubs Freak. Were you talking about the Ben Franklin book, The Income Factory? I'll just show them all to you. The Income Factory by Stephen Bavaria. We've got The Little Book of Valuation, Aswath Damodaran. Sorry, it's kind of blurry. And then this third book, the Ben Franklin book, is The First American by H.W. Brands. Highly recommend, for sure. I can't put it down. I'm going to read it tonight, read some more tonight. Steve says, let's all chip in and buy Ryan some shoes. Yeah. No, man, I don't wear shoes in the house. I don't know why I'd wear shoes in the house. Okay. Okay, guys, I think Matt Money. Dude, this is the comment of the night. It sounds like Ben Franklin and Jerome Powell have a lot in common. They both love to print. Dude, that is hilarious. Matt Money made an appearance when the four of us guys got together. Darth, Ari, Russ. Matt hopped in there too. That was fun. Barrow, hey Ryan, is there any other dividend investing books you can recommend? Yes, there's a few. Oh man. Okay, bear with me. I've got a few. So I'm not going to pull them out because I don't want to put them away. But obviously, The Intelligent Investor by Benjamin Graham. That's a must read. Okay. Value Investing by Bruce Greenwald. That's another one. That one reads like a textbook. Super boring. So does The Intelligent Investor, but good reads, important reads. You'll learn a lot. Okay. This one, before you read the first two, I would get this one. Warren Buffett in the Interpretation of Financial Statements. Every investor should go through that book. It teaches you so much about just reading financial statements, breaks it down super simply. I will share with you one book. We'll pull out one book. Okay. This book, I know Russ read this book too. Buffett, The Making of an American Capitalist by Roger Lowenstein. Fantastic Buffett biography. Highly recommend you guys check this out. And also, I don't remember the title of it, but Russ has a book. Russ has a book you guys should check out. It's on Amazon. I think he even gives it away for free if you sign up to his newsletter. Russ, if you want to drop the link here in the live chat, you definitely should. But you guys should give that a read as well. But as far as like dividend investing specific books, that's really all I all I've got for you. Trying to think if there's anything else. If you guys are interested, one more I'll share with you. If you guys, all of you JP Morgan shareholders, all of you JPM shareholders, I think you should read this book right here, The House of Morgan. It basically, I mean, you can tell it's super, super thick. There's like 720 pages in it. It basically goes through the entire history of JP Morgan Chase, from like the, what was it? I guess it'd be the 1800s up to like the 1990s. So a lot of history. Really interesting. Interesting to hear about the bank's origin. Not only that, but how finance in America and banks' role in just in everything that had to do with the country. It's just interesting to see how involved banks were and what role they played across different time periods. Like they were like, I don't even know how to explain it. They were so important back in the day. JP Morgan Chase actually, or JP Morgan at that time, House of Morgan, owned a lot of the railroads back in the day, financed a lot of the railroads, helped Ford finance a lot of his company. You know, just like things that you wouldn't even think about, they have their hand in. It's crazy. Like one of their partners, this guy named Tom Lamont, even was like, this isn't good, but he was even like writing propaganda for Mussolini. It's insane, like what these bankers had their hands in. Sorry, guys. But let me see. Let me get caught up in the comments real quick, see if there's anything else, and we'll, I'll get out of your guys' hair. I love talking about books. It's fun sharing these books with you guys. Let's see here. Okay. Buy some VFC instead of shoes. Luis, I'm actually, when I leave, I'm about to put on some Vans, put on my slip-on checkered shoes. I always got to keep a pair of those in the closet. Okay, guys, so I think this, I think this is a pretty good place to wrap it up. We're 7 minutes over the hour. I really enjoyed talking books with you guys. Anytime you guys want to have questions about books or anything, I love chatting about that or have any book recommendations. But anyway, yeah, I think this is a pretty good place to wrap it up, guys. All 125 of you who are still here, I thank you guys so much for tuning in and hanging out with me this last hour and some change. You guys are rock stars. I really appreciate all of your support on the channel. And then for those of you who are still here, I actually should have mentioned this earlier in the stream. Next Wednesday, I'll be putting out a new version of the spreadsheet officially. I'll put out a community post about it. I'll definitely give some notice. But I just wanted to share that with you guys here. I meant to do that earlier. New spreadsheet coming out next week. Great video coming out on Sunday, so stay tuned for that. Hope you guys have a fantastic weekend. Stay out of trouble, and I will see you in the next one.